I'm Frank Shin here with REIClub.com, the only site you'll need as a real estate investor. In today's quick video, we're going to be talking about real estate rental properties, the pros and cons, and why you should be investing in them in a down market. See, sources from Fannie Mae and Freddie Mac expect the total number of renters' households to increase by 4.4 million in the next 3 to 4 years from the already 37 million. See, guys, with the current unemployment rate at an all-time high, what that means is more families are turning to renting their homes, or renting properties, than buying properties. And well, the reason why is because it's A, more affordable, and B, it's a lot more flexible. See, buying a home creates a lot more liability for someone, especially if they're unemployed. So during a down market, renting is just much safer. So right now, what I need you guys to understand is that the renters market is probably the only area of real estate investing that has drastically increased in the past year, and is expected to continue growing until the property values and the market decide to stabilize. Now, one of the main reasons to rent property is really just collecting on the appreciation, and you also get pretty good monthly cash flow. Now, why should you not be selling in a down market? Well, right now, it's just not the best time to sell. With the property values around the nation at a decline, it is considered a buyer's market. If you decide to sell now, you're missing out on a lot of potential appreciation. Now, unless you bought this house during a down market, most likely you're going to be selling your existing property at a loss. Now, let's go ahead and move on. What are the pros to renting your property? Right now, it's really the main key is building passive monthly income, okay, while you wait for appreciation. Now, if you own any commercial rental properties, commercial real estate, there's exponential growth there, as you may know. Any slight increase in rent, okay, will you'll see drastic, huge changes in your monthly cash flow, okay, 15, 20, 25 units, $25 increase per month. You can kind of do the math and kind of see what you're working with. Now, another benefit to your rental property is the appearance. It doesn't have to be at for sale condition. So any large, huge kind of investments you're thinking about, kind of hold off on that. You're just trying to make it appealing to renters, okay? When they decide to move out, then you kind of explore your other improvements that you want to take. Now, if you're able to find a good tenant that's paying rent on time and they're maintaining the home, it's great because they're covering your monthly costs, as well as reducing your maintenance costs when they decide to move out, as well as reducing the amount of turnaround time if you're deciding to sell at the end of that period. Now, one of the biggest things about rental properties, as well as the security it offers, it's a lot more stable than the stock market, and it allows a lot more appreciation than any kind of interest rates you're going to find with any bank institutions. If the real estate market falls, you have a renter in place, they're still paying the same amount of rent, and you're still covering your costs. Now, if the stock market drops, okay, your dollar amount drops, and that hurts. Now, let's talk about the tax perks, guys. Depreciation, okay, annual tax deductions for the losses taken in the value of the real estate of the home, as well as any repairs, maintenance, that you have to acquire as a landlord can be tax deductible. Now, these tax breaks have the potential to offset the income tax you're paying from the rent. Now, another concept I kind of want you guys to understand is how appreciation works. Now, increases in value happen far more frequently than the loss to value, okay? Increases in value happen more frequently than the loss in value, especially in real estate. Now, if you've owned an existing mortgage, okay, what does rent do? It covers a portion of your principal. Now, what that means is even though you haven't sold it, you don't live there, you have a renter in place who's covering your monthly costs and really building that equity in the home, which is powerful, powerful, powerful. Now, guys, let's go ahead and move on to the cons of renting your property. There always is a downside, but these can all drastically be reduced with a good screening process. I have a video for that. You should check it out. Now, commonly, you're going to be dealing with late rents, okay, vacancy periods, damages to property, issues with tenants such as legal issues or demanding or needy tenants. And then you also have the maintenance costs monthly, quarterly, annually as well, insurance, and then tax, property tax. But once again, guys, these are all pretty manageable, especially if you do the screening and then maintain your costs. Now, the last tip I want to leave you with is these are for people who own properties for 5 or more years, who have been in the game for a while. If you've owned the property, and even if it's free and clear, okay, and you're contemplating selling it, during a down market, most likely you're going to be taking a loss. And you're thinking, what? I own it free and clear. All the money I make is my money. No, well, if you bought it for $100,000, okay, and it was valued at $100,000 or $120,000 during an up market, okay, Right now, the down market's at $105,000. Even if you're free and clear and you're selling it for $105,000, you're losing $15,000. You're not selling the house for what it's potentially worth. And especially if you have a renter in place, what's the rush? Continue to wait because it's going to appreciate, okay? Now, guys, like I said before, if you're not in a rush for immediate capital, one of the best options for your money is to invest in a rental property. It allows you the flexibility to wait for the market to appreciate, all while building equity and maintaining a steady cash flow. See, many homeowners become stealth investors or secret investors because they never sell their previous home when they move. They rent it out. So for the ones who are homeowners who are moving more than others, well, you get the point. They have a lot of passive properties. So leasing properties definitely has its long-term advantages compared to selling. So I definitely encourage you to kind of investigate that. I hope, this video kind of gave you a better perspective on the current market, or, why you should be renting in a down market. Guys, I hope you enjoyed the video. Please be sure to leave comments below as well as like it, because it really does help us out. Thanks for watching, as well as subscribe to our YouTube channel so we can keep you informed of when new videos are posted. As usual,